Hello, welcome to IG's Trading the Markets. Clients here have a huge number of positions open on the gold markets and also across gold miners. But really, there's been a surging interest in silver recently, also described as perhaps the new gold. Well, with me right now to talk about all this and more is Paul Cronin, the head of Adriatic Metals. Just a really quick introduction to our clients. Just give us a sense of what you do before we talk about silver.
Well, look, Adriatic Metals is a mining company. We're operating a mine in Bosnia that we've recently just constructed. It's about 55 kilometres north of the capital, Sarajevo. And it is a mine that is predominantly silver and zinc as its two main commodities. We've started working here. I mean, Adriatic Metals is a British company listed on the London Stock Exchange. We started working here 7 years ago, and we've taken the discovery of this asset into production very recently. So the company's sort of starting to change quite quickly.
Now, Paul, you've got unique insight into, the outlook for this market. How much growth is there in silver on the demand side for, say, the next 5 to 10 years?
Look, the silver demand really varies depending on how investors want to preserve the value of their currency. So, about 45% of silver demand is based on just its precious metal value. Where we are seeing a lot of growth has been in its industrial uses, and its industrial uses increased about 20% last year. And that's largely been driven by photovoltaics, but also because silver is such a conductive metal with very low resistivity, we're seeing new uses coming into semiconductors, into high velocity electric vehicle charging. And now there's potential to deploy silver in other parts of our power grid, as we're seeing an increased amount of electricity demand globally, primarily driven through data centers and artificial intelligence.
And as we've seen, there's been a huge renaissance, or rather, those who are keen on AI say it's renaissance. Those who are critics say that it's a bubble. But either way, we've had a huge amount of interest in AI, and that's really carried the market in the last 18 months, especially on Wall Street. Also, at the same time, the electric car revolution continues, not at the pace that we've seen in the last few years, but it continues. The IEA recently saying more than 1 in 5 cars sold globally is set to be electric in 2024. Are these all just positives for silver?
Well, look, I think so. But if you look at silver supply and demand fundamentals over the last sort of 13 years, from 2010 to 2020, the market was relatively balanced. Small surpluses, small deficits year on year. Come 2021, there's been a huge deficit, 2022 and 2023. And if you look at those 3 years combined, there's over 500 million ounces of silver in deficit that's been drawn out of stocks. Now, that's almost half of 1 year's total demand, which is huge. I think when you then take into consideration that we are seeing declining inventories, we're also seeing declining reserves in available silver mines, and we're seeing a massive increase in costs. So C1 cash costs for silver production have increased over 60% in the last 10 years. All of this bodes very well for silver prices. If we look at the long-term gold-silver ratio, so over the last 10 years, it's been about 80 to 1. So 80, gold is 80 times the value of silver. I think that's going to change. I think we're going to see that revert back to where it was in the 1960s and 70s, where it was closer to 30 to 1. That means silver prices are likely to go up quite substantially. Now, of course, I'm talking my own book, but I look at the fundamentals and I don't see any other route for silver prices moving forward. At the end of the day, only about 25% of supply comes from dedicated silver mines. The rest comes from copper and zinc largely. We've seen zinc prices very depressed over the last couple of years, and I think that has had a fundamental impact on silver production. So ironically, we're not likely to see an increase in silver production to meet that increase in demand until we actually see zinc and copper prices increase. And none of that bodes well for 2025 inflation.
What's also interesting is back in February, Adriatic produced, I believe, the first concentrate at the Vareš Silver project. And at that time, I believe you said you were aiming for 65,000 metric tons a month by Q4. How far away are you from this projection?
So 65,000 tonnes of ore development per month will be achieved in Q4. At the moment, we're still ramping up as we cut more development drives into our production stopes. At 65,000 tonnes of ore, we should be producing around about 8,000 tonnes a month of zinc concentrate and around 5,500 tonnes a month of silver lead concentrate. And all of those concentrates will be sold either in Europe or in China. So it does take us a little bit of time to ramp up to full production, but we're confident in getting there by the end of the year as we've guided the market.
At the same time, we're seeing, still weakness out there. That great China reopening never quite materialized. The US seems to be, coming along quite nicely with quite robust data coming out of there. But we do have still geopolitics and tensions between the West and Russia and China. Do you think that we'll see more diversification and perhaps more metals production needed in Europe as a result?
Yeah, look, I think we saw the Inflation Reduction Act in the US have a profound impact on metal production, not just in the US, but also in places like Australia, Canada, and South America. The European Critical Minerals Act, which was adopted last year, is intended to increase raw material supply in Europe for use in European high-end manufacturing. Now, Adriatic Metals was set up on the basis that we felt that was going to happen eventually, that Europe, supply chains would become fragile. Europe would start to look at how it's going to secure what it needs for its high-end industrial companies. Our timing was quite good on that. We're bringing the project into production at a time when Europe needs it most. And because we're close to our supply base, our carbon intensity is far lower than a lot of our competitors.
And speaking of carbon intensity, mining, as we know it, I've been to, mines and seen them from afar and seen the impact. And in a time when ESG is sort of, mentioned everywhere, how are you lowering your impact on the environment?
Look, we don't have a big impact on the environment at all. Certainly when you construct anything, whether it's a road, a new building, there is some vegetation that's been removed, and we've removed about 32 hectares of commercial forest. But we've also planted more than 4 times that number of new trees. So when we look at our impact, we look at both the negative impact and the positive impact. I think from our perspective, if European smelters in Benelux, Norway, and Sweden are requiring a zinc concentrate to create, galvanizing agents for steel, they have a choice. They can buy it from a mine that's close by that has a lower carbon intensity in terms of getting the product where it needs to be, or they can look at buying it from someone like South America, or Australia, or China. So I think overall, the environmental impact that Adriatic has is actually negligible, if not a positive, on European supply chains.
And for those investors watching this, looking for exposure to silver, which route would you suggest if they're new to investing in silver?
Look, you can buy silver relatively easily. You can call up the London Bullion Market Association and buy bars of silver. You can buy COMEX futures. If you're looking for a leveraged exposure to silver, clearly that's going to come through the silver miners. And companies like ours that are not fully valued because we've only just entered into production, I think offer a very good choice for investors to get a leveraged exposure to silver, albeit at a slightly higher risk than buying it in a vault and leaving it sit there.
Thanks very much, Paul Cronin, the head of Adriatic Metals, talking to IG. This is IG's Trading the Markets.